We're talking about Huobi, and it might get purchased by SBF, and maybe Justin Sun is involved, as always. According to new reporting, Leon Lee, who is the majority stakeholder of Huobi, is looking to exit from the ecosystem. He has about 60% stake in the exchange. They're trying to value the exchange about $2 to $3 billion. He's trying to sell his majority holdings to either SBF or Justin Sun. Justin Sun has not commented as of now, besides a tweet saying that he does not have really much anything to say at the moment. This is also reported according to some investor notes that were let out, so we don't quite know what happens. For Huobi itself, it is a very large exchange. It had a lot of issues coming out of China's basically blanket ban of crypto last year, where they banned Bitcoin mining, peer-to-peer trading in crypto, and a lot of other things, but they survived it, and they're still a pretty large exchange, especially off the shores of the United States. Adam, I want to throw this one over to you. What's your take on it? To me, it just seems like, hey, we're going to see more M&A deals in the ecosystem, and large exchanges like SBS, FTX are going to be able to scoop up rivals.
Yeah, I mean, I think that that's exactly right. I think that what you're seeing here is sort of a consolidation phase in the industry that has really not begun, right now. It's been spinning up over, call it, the last 9 months, but I do expect that to increase, and I expect to see more and more things like this. The reality of it is that if you have a company that's worth $3 billion and there are companies out there who are willing to value it at that and give you that money in actual money or in equity in theirs, then it basically means that you're done, right? Like, you might be the guy who's like, yeah, I actually want to be Elon Musk, and actually it's more important for me to have $80 billion. But gotta tell you, having a single $1 billion, that's pretty good, relatively speaking, right? Like, that's never need to worry about money again for the rest of your life, and also your kids, and also their kids, and also their kids kind of money. So with that in mind, again, like, this just makes sense to me. Like, if that type of deal is on the table, why wouldn't you take it? As far as kind of the broader point here, what I'm really waiting to see here is what type of consolidation do we see, and how many big exchanges do we wind up with? Because as this ecosystem continues to grow, we're going to see a bigger and bigger difference between the upstart players who are just getting started and are attacking very specific niches versus these big monolithic platforms that are essentially the equivalent of, your traditional New York Stock Exchange or something like that, right? So it's a very interesting situation. I think we will see more of these, and I'm not at all surprised to see that Justin Sun is out there contradicting whatever it is that's said about him. That seems to be pretty par for the course. Jen, what do you think?
Yeah, FTX has really been on a tear lately, scooping up platforms with licenses and jurisdictions that they don't have. I think it's been a really clever business move. I'm going to take a line from Zach, which was borrowed from Kanye West. No one man should have all this power. To Adam, to what you were saying, it just really seems like we're building up these giants and people and companies that are really similar to those that were built during Web 2. And are we just kind of replicating what happened in Web 2 and not focusing on the decentralization part that is like the foundation ethos of Web3, right? We talk about decentralization. We talk about people having ownership in the products and platforms that they participate in. But there are these giants who are really taking over the industry. They have huge sway over regulators in multiple different jurisdictions. It kind of seems to contradict the ethos. I mean, Adam, I would love to hear your thoughts on that.
Yeah, I mean, so there's the sort of blockchain cryptocurrency ethos in a broad sense, and that really speaks to on-chain activity. That really speaks to that speaks to kind of the base layers of these technologies. What you see over and over again, though, is that decentralization comes at significant costs. And when you're talking about something like, like people who want to trade and who want to, buy derivatives and want to do high frequency stuff, right? It just doesn't make sense to do that stuff at the blockchain decentralization level. So in practice, what you see is an incredibly competitive boiler environment, right? Where all of these different companies are competing for what is essentially both to grow the market, while at the same time also competing with each other to steal market share from each other. And Binance and FTX really have been the big winners in this. They've done it in large part by playing the game in such a way so they weren't waiting for regulation. They were actually trying to stay ahead of regulation at every sort of turn. And you'll notice that neither of these exchanges accepts US customers through their primary products. That's exactly because if they were to accept US customers, then, but even with just one US customer, they would then fall under the sort of auspices of the US regulators, which if you look at Coinbase and their experience, you can see is very, very challenging, both from a compliance standpoint and from a what are you allowed to do standpoint. Justin Sun, not Justin Sun, CZ over at Binance, and FTX, they really have none of those problems, right? They can pretty much do what they want. And if it goes poorly, then they just say, oops, we didn't mean to do that. Let's stop doing that right now. We're not actually going to offer tokenized Tesla stock. Just kidding. So it's that, right? Like you can have these gigantic centralized companies that are built up around this decentralized technology. And at the end of the day, again, like for as many people as are here, I would say that 8 to 9 out of 10 are not here for the technology, are not here for the decentralization. They are here because they think that this represents a great investing opportunity. And again, it's that type of dynamic that leads to these gigantic centralized players becoming so dominant. And this consolidation phase is exactly what you would expect at this point, just given how much money they have.
Yeah, I totally agree with you. I think that like on the DEX level, it doesn't make sense to do a lot of those things. And so you're going to continue to see these centralized players perform and get larger. To me, the question is like, what is next, right? Because we saw Coinbase pop up 2017, 2018, Binance in between, and now FTX has really been stealing the show for the last 2 years or so. Before that, FTX didn't really exist, right? They launched Alameda Research and FTX in 2018, 2019, and now they've really become such a large name with their own name on the Miami basketball team's arena. So it's just a huge move in terms of magnitude, and they continue to scoop up competitors. I'm wondering when that run stops, or if it continues. Coinbase and Binance continue to dominate their respective industries, but we don't see them in the headlines quite as much as we do see FTX these days. But Adam, will give it to you for the last story.
Yeah, they just become sort of part of the furniture after a little while. They get to be less exciting, but they still maintain these gigantic incumbent positions. It's going to be very interesting to see how it shakes out.